The big news this week came out of Jackson Hole this morning. Fed Chair Jerome Powell basically signaled that a quarter point rate cut is now basically planned for September. And he acknowledged what a lot of us have been feeling and what I've talked about in a lot of these updates. Basically, the job market's weakening, the economy has been cooling off, and the inflation that we're worried about from tariffs is really more of a one-time bump than a long-term problem. And that's good news for mortgage bonds, and it has helped rates a little to start the day. Markets are still nervous though, because a couple weeks ago, traders were betting almost 100% on a September cut. But after we got some hotter inflation numbers, those odds dropped to about 70%. But Powell's comments today did push him back up. But these numbers could continue to change depending on what happens with the next inflation reports, as well as the job numbers that we're going to get on September 5th. And on the housing side, sales of existing homes actually ticked up in July, which shows there's pent-up demand and lower rates could unlock even more buyers. At the same time, deals are falling apart at a record pace. About 15% of home purchase contracts were canceled last month. That's the highest July on record. Buyers are probably nervous about affordability, inspections, and in some places, like San Diego, rising insurance costs. And this is most common in states like Texas and Florida, where there's a lot of new construction and buyers feel like they can walk away and maybe find another option. But if you're experiencing this in California, reach out. Happy to help improve affordability and help all your clients shop for insurance for you as well. But buyers do seem to have more power right now, but they are, like I said, backing out of purchases more frequently. And for homeowners, even with rates in the mid-sixes, there's still a big audience of sideline buyers that are just waiting for the right opportunity. And you can unlock that by offering lower rates now, which we can help with. Looking ahead, we're going to get housing news, GDP, and the Fed's favorite measure of inflation, that's PCE, next week. And those reports are going to make it clear whether September really is the month that the Fed finally starts cutting. And if they do, it won't necessarily drop mortgage rates overnight, but it does set the stage for a gradual move lower. I'll see you next Friday.